There were a few stories in the FT this week which shows that President Xi's attack on capitalism in China seems to be gathering momentum. What do you do then as an investor when you're looking at this? Because initially, some people felt that after the first sell-off of Chinese stocks, that it was now bargain time.
Well, when the communists are around, there's never a bargain. I think that's the first thing. But that's a bit of a flippant comment. Seriously, though, I do think that most people have historically invested in China for the growth. They used to have very high economic growth rates of 8 to 10 to 12% GDP growth rate, and that's come down all the way to 1 to 2% and continues to decline. So if that's the reason you want to invest in China for the growth, well, there isn't any. So I think you need to be aware of that fact. And whatever profits are going to be generated by the privately held companies there might not all follow through to shareholders or flow through to shareholders because the government wants to fund its common prosperity program. So it's going to take some of those profits, as it has done with Tencent and Alibaba and other companies and other gaming companies. It wants to fund its common prosperity program. And the final thing is you still cannot rule out nationalization of some of these companies eventually, which means VIE structures could come under pressure. So there are huge amounts of headwinds for investing in China at this point in time. And it's something I would avoid unless you're a value investor and you see that the state-owned entities in China are trading at depressed multiples, but they might just be the only companies in China worth investing in at this point.